Welcome to Wealth Creation Investing. My name is Forex Joe. In this video training, we're going to be discussing currency monthly report for January 2013. As I put up the disclaimer, I hope everyone here has taken advantage of our special on our trade alerts here at Wealth Creation Investing. And those of you that have not seen our disclaimer in the past can stop this video at any time and read this. Otherwise, we're going to continue. Each and every time I put out a training, I try to show our gears to embed in your mind exactly what it takes to learn how to participate in the most liquid market on earth today. We have the 15-minute chart on the far left-hand side moving and how much energy it has to spend to rotate into the 30-minute, into the 1 hour, 4 hour, all the way up to the daily, weekly, and monthly charts. I take a look at the daily chart each and every day at 4 o'clock Central, 5 o'clock Eastern New York time. I accumulate all the information for the previous 24 hours, and I'm looking left to right as a swing position trader at the daily, weekly, and monthly charts for entries that's going to generate more pips over the course of days, weeks, or months. Those of you that are scalping, 3 to 10 pips, or day traders, 10 to 30 pips, or swing or position style, we utilize any trading style here with the Wealth Creation FX trade alerts. As your journey continues in the Forex markets, you are always going to have light bulb moments. These light bulb moments will continue, and we hope that by participating in all of our activities here at Wealth Creation Investing, the journey is made simpler. We continue to try to keep it simple during your quest for success in the Forex markets. This is the currency monthly report for January 2013. Now there are 28 pairs here. I know we covered 22 pairs, but we're in the process of seeing if we want to add any more pairs here in 2013 or whether we want to stay at 22. So before anybody starts doing the count, there are 28 pairs. Let's look and see what's hidden in plain sight. In fact, we ask that you please review the charts above and in recent weeks to enhance how the pairs have reacted since the beginning of 2013. Now, once we had our class at the end of 2012, I made a prediction that there was going to be at least 5 currency pairs that's going to move 2,000 pips or more. Well, we're off to a pretty good start, ladies and gentlemen, because last year there was only one currency pair that moved 1,900 plus pips. That was the pound yen. First and foremost, let's take a look at the 4 majors. We're going to do this in sequence. We have the euro dollar, we have the pound dollar, we have the US Swissy, and the US yen. US yen's up here. Well, immediately we see that the US yen is the leader, plus 498 pips or 5%. Now, our goal for a year is to hit 30% in the markets. Anytime you can get over 30% in the markets for a year, it is a gravy train. We are not like most people giving unrealistic expectations to where you have to be focused every day to try to get 40, 50%, and in some cases people are talking about 100%. Because it's unrealistic expectations. Could it happen? Of course it could happen. But in 1 month we had a 5.4% gain in the US yen. 5.4%. It moved 498 pips. That means there was weakness in the yen because the yen's on the right-hand side, the US dollar's on the left-hand side. It went plus or blue sessions, 498 pips. It was at 86.75. It closed at 91.73 at the end of January. Now, since then, we've tested 93, so it's even more pips, and we'll talk about that here momentarily. The euro US dollar, 387 pips. It moved from 31.90 all the way up to 35.77. The pound dollar. Now here's where we have something of substance that needs to be addressed that's hidden in plain sight, and until yesterday when I wrote about it, many of you were not paying attention. In the pound dollar, minus 389 pips. Now, immediately it throws up a red flag. Why? Because the euro dollar and the pound dollar are supposed to move in tandem. They are parallel pairs. Folks, The euro moved up plus 387 pips. The pound moved down minus 389 pips. That is inverse. They are going in opposite directions for an entire month. That in itself is an aberration that needs to be corrected. This is something that you need to be cognizant of, and you have a month's worth of data to prove that this is completely out of sync. So you had the pound dollar that moved from 62.45 all the way down to 58.56. And then the last part of the four majors, the big four, the U.S. Swissy only moved the entire month minus 51 pips. So immediately when we take a look at the four majors, what do we have that is a confluence of events? Number one, the U.S. yen. The yen has continued to be weak. We have been riding the yen since the end of November all the way into December. We've been talking about it since it was at 79.50, 80, again at 82, at 84, 86, 88, 90, 91.01, and when it got above 93. We have given you the information of showing you how to write a trend while it has been happening in a pair that in most circumstances did not move that much. In fact, the Canadian and in some instances the Swissy has taken over by slowing down where the yen has picked up and been a real mover. Now we'll talk about the yen crosses here momentarily. Part two of that equation, we have the euro and the pound going in inverse directions. They are parallel. They're supposed to be going in the same directions. If you were somebody that was just following that these pairs are going in the same directions in parallel, you got clobbered in the markets. If this was one of the tools that you use and you got tattered, battered, and torn, you now know what was going on. In the fact that the Swissy only moved 51 pips, it's been much ado about nothing. Now, we've covered the four majors. Let's cover the next three pairs, or the top seven that we report on. Of course, that would be the New Zealand dollar, the U.S. Canadian, and the Aussie dollar. Upon further review, there's not really much happening. The New Zealand dollar moved up plus 108 pips. The U.S. Canadian plus 54 pips. The Aussie dollar plus 33 pips. And look at this range for the Aussie dollar. Now this is the open and the close. We did go all the way past 0500 and we went all the way down to about 0250. So this isn't overall pips. Overall pips are different. You have more movement in overall pips. We're talking about what the number was at the end of December going into January, 0392, and what it closed at here at the end of January, 0425. So this pair has been oscillating in this channel for a period of time. If you review these charts once a week and then you review them once a month, what I'm going to do is continuously build and show this portfolio. I've been doing this for years. It's a way to show where and how currency pairs are ready to compress and compact and get ready to break out, and where currency pairs might be able to retrace because of huge movements. Now, since we've been talking about the yen crosses, and that has been at the top of our portfolio explaining about experienced trades in our alerts, upon further review, we have been dead on. Look at the euro yen, ladies and gentlemen. 1,011 pips for the month, an 8% gain. The New Zealand yen, 516 pips, 6.7 gain. The Swissy yen, 607 pips. The Aussie yen, 552 pips. The US yen, 498 pips. So you have the top five movers all show yen weakness. Now, if you have all these tools, along with whatever tools that you're using, and you use simple techniques, and you follow the trade plans, there is absolutely, positively no reason why you should not be making positive pips in a practice regimen account. The only problem you will encounter is when you go live is that your opponent is yourself. Let me repeat that. When you go live, your opponent is yourself. You see, I talk about techniques in trading, and it can be taught. Number 1A, and we've done many researches to where over 77% of traders don't give a cahoots about mindset. I would encourage each and every one of you to focus on your mindset because the techniques being taught work. If you are not experiencing success to this point, there are only two reasons why. You are inexperienced, you haven't been doing it long enough, and you're just learning the concept, or you've been trading for over a year or 2 years. You keep taking one step forward, two steps back, and you're not focusing on your mindset. If you will learn to focus on your mindset and get rid of the stinking thinking, overcome fear, self-doubt, and emotions, then this has been proven beyond a shadow of a doubt that this system works. It's all about the numbers. The numbers don't lie. And the information that's been given has been more than accurate. It has been dead on. So all you have to do is go back in the archives and review all of the reports from the trade alerts, and you will see where there was a ton of pips to be made if you had followed the game plan. Now, if some of you are not trading the yen crosses, then you haven't picked up on this amount of pips. If you've traded the euro and the pound, there's been possibilities. Some of the others have been oscillating. This gives you a chance to know, besides the euro US dollar, where I give you the most information that has moved plus 387 pips, plus the currency pair that you're stocking. And let's say for this instance that you're stocking the pound dollar. Then you have a combined 700 pips for the month from these two pairs. It is time that if you've been doing this for a month, are you able to generate positive pips from the currency pair that you're stocking along with the euro and any other pairs? If you are, it's time to move to the next level and add another pair to stock for this month. If you are not, then you need to focus again for the next month. You might be brand new to the area and you're just starting out. Continue to focus on the euro US dollar, the currency pair that you're stocking, and if you're able to place the other trades that come out in the alerts, place them when they first come out so you can review. But understand, sometimes these trades hit 2 or 3 times in a 24-hour session. Sometimes you could get a take profit 1, take profit 2, and then it comes back and stops you out. Or sometimes it could stop you out and then hit later on in the 24-hour session. This is why you need to monitor, if you are setting entry orders, that you are at the mercy of not being live in the markets. As long as you understand the risk, as long as you understand the rules of engagement, then you can make a determination. You don't have to get upset. You don't have to go on tilt. You just have to follow the rules of engagement and understand what your limitations are in the markets. So we're going to be doing this exercise each month.